Hey, everybody. Welcome back to the Pleb Underground. Happy Friday. We've got an awesome interview with an amazing guest. That's right. We've got Lawrence Lepard, author of The Big Print. And I know Ulric is super psyched. I'm super psyched. And as French Hoddle alluded to, today is the day that QE begins. So this is serendipitous, synchronicity, whatever you want to call it. It's absolutely awesome. We are going to talk about, obviously, the big print. We're going to talk about the Fed's move, right, into this this new foray of not QE, which is also QE. We're going to also take a look at essentially looks like Lawrence got some attention from the Donald, so we're gonna discuss that. We're also gonna talk about the Bitcoin treasury companies. We're gonna talk about gold. We're gonna talk about M2. There's gonna be so much hopium, your faces might melt off. I'm not gonna lie, your faces may melt off. But before we dive into all the fun stuff, you know the deal. I'm gonna give a shout out to the Pleb Underground sponsor that makes amazing, high quality Bitcoin collectibles. Here we go. We're gonna be right back. We're gonna bring Lawrence on, and that's it. Just gonna rip the Band-Aid off. Here we go. Pleb Underground is sponsored by Archimedes Emporium. Discover the pinnacle of precision engineering, starting with their Bitcoin logo wall clock, meticulously machined in Maine from a solid block of aerospace-grade aluminum, ensuring unparalleled durability and performance. Experience the difference of a product made without compromise. Head on over to Archimedes Emporium. All right, everybody, welcome back. Lawrence Lepard, sir, thank you so much for joining us on Pleb.
Nice to be with you guys. I longtime friend and always enjoy talking to you guys.
Absolutely. You are an account, sir, that I have been following for a very long time, and something I find incredibly interesting is that you hold no punches. You dish it. You absolutely dish it, and I appreciate that. It's something that you don't end up seeing too often, right? So a lot of times you end up seeing people be a little bit more polished. Now, I don't know, is that just a Lawrence trait, or is that part of the Bostonian? I did live in Boston for 13 years, so
yeah, I'm not sure what it is. I think it's just the way I'm put together, and maybe
there's got to be something in the weather, man. I tell because David, like I said, your brother-in-law came on the stage 2-3 months ago. Someone in the comments gave him a little sass, and David gave it right back tenfold. And I was like, we don't do that in LA. You know, the beach is here. It's kind of nice. It's kind of warm. He gave it back to him. Like, ding. So
maybe it's geographic. I don't know. Bottom line is, it's a fault, right? But I'm just pretty frustrated with the years and years, decades really of fiat abuse. And so, it's hard for me to hold back, and I'm at the stage where, I can really, it's like IDAFG, I don't give a fuck. I mean, and so I kind of call them as I see them. And I think somebody needs to do that occasionally to try to shake people out of their complacency, because, there are a lot of people just sleepwalking through a broken system, not realizing that they're sleepwalking.
So the I don't give a fuck. Do you think that has something to do with age? Because I can honestly say that when I was in my 20s, I LARPed it, right? I pretended as much as possible that I really didn't give a fuck. But the problem was that I had to give.
Well, that's part of it. I mean, it certainly helps when you get older, and it certainly helps when you get financially independent. And so, you're not so careful about the image that you leave, because it doesn't have any impact on the outcome of your life. And so, I'm at that fortunate stage in life where I can call them as I see them. And, and so I do.
I got to tell you, I have recently reached that part of my life as well. And not going to lie, I've been waiting for this, right? This is one of those moments. Yeah, this is definitely one of those moments that I've been waiting for. So, Ulric, go ahead. I was just about to dive right into the big print, but go ahead.
Yeah, and actually, again, I think it's great that I'm on the Pleb Underground with Phil as my co-host, and I'm his co-host, because that's what I was going to ask. I think that was a perfect segue, because the things that you've seen, Lawrence, in the big print, which, by the way, thank you very much for letting me be a part of this. I did a little bit of editing myself, and it was nice to see the things that I touched on in the book. It was nice to see my name in the book. But did you, that edge that you developed from years of living from the fiat system, basically giving you, you know, a bad deal time and time again, and you learning from that, you thriving amidst that. Did that come out? How did that come out in this book?
Well, I think anyone who's read the book will agree that I just kind of told my own personal story. And, you know, I told about how they changed the rules in 2008. You know, I told the history of the 70s and 80s with all the bailouts and corruption that took place there. And, you know, what I tried to achieve with the book was a wake-up call, you know, to the average American that, you know, they've been taken advantage of monetarily. They don't know it. They're sitting in a world where everything they buy is more expensive and groceries are eating them alive, insurance costs, et cetera. And so they all find that life is getting harder. You know, they work harder, but it doesn't, you know, their salary doesn't keep up with the costs. And so, and there's a reason for that, but it's a subtle reason. You know, the people who set up the system, they're not stupid and they gaslight us. And so, you know, a lot of people don't really understand what's going on. And the book was I tried to write the book almost as a manifesto. I don't like that word because, you know,
what it implies.
Yeah, what it implies.
A lot of manifestos.
Yeah, it's been misused, but it was meant to be a strongly worded, you know, wake-up call. I mean, perhaps, I think maybe the best comparable, I just reread it recently, was Thomas Paine's Common Sense, where, you know, he was of the view that, you know, America had to separate from the British Empire. And you know, at the time, I mean, it wasn't such a done deal. I mean, the people who were the patriots were originally a minority within America. And he wrote this book and was kind of like, look, guys, this isn't going to work. And here's why. And we got to wake up and fix it. And I think that, you know, if I could, you know, pretend to have a parallel to what I tried to do, I wanted to write a book that everyone could understand. You didn't need a college degree or any kind of a higher degree to understand. Anybody could simply read it. You know, if you had common sense, you could read it and understand it and go, oh, yes, now I see how we've been taken advantage of. I see how they've set the system up to do that. And that's all the depressing first part of the book. In fact, Ulric suggested I break it into two parts. I did. And the first part was, you know, what's the problem? The second part is what's the solution? And of course, you know, some people said, well, the first part's kind of depressing. And the fact of the matter is it is. I mean,
and it should be.
Yeah.
Otherwise, people are going to say, why do I need this?
Yeah, if you've got, you know, if you're sick or you got a problem, I mean, it doesn't do you any good to pretend it doesn't exist, to just be a Pollyanna about it. And so, you know, the first book was, here's the problem, here's how it's developed, why it's developed, here shows how it developed over these many years, decades really. And now it's kind of all coming to a head. And, you know, and it's being manifested in this extreme form of, you know, wealth inequality and unfairness for the people in the lower half of the earning spectrum. And, you know, and so that's all pretty bad news and depressing. But the positive news is, the flip side is that technology is saving us. Technology, decentralization, the internet, which is ripping apart the channels, the news channels that they use to gaslight us, you know, and then now decentralized money in the form of Bitcoin. I mean, everything is going to change, and the world is healing, and things are going to get much better again, so that, you know, the outlook for my kids and maybe one day grandkids, I think, is going to be, you know, much, much brighter. But we do have to make it through this period of monetary transition, which we're right in the middle of right now.
And on that point, what are your thoughts on stable coins essentially being part of the can-kicking technology that allows this charade to continue? What are your thoughts?
Yeah, that's a great question. Stable coins remind me a little bit of Doge. You know, I remember, you know, Doge was this great thing that was going to save the government. And then I was listening to Preston Pysh this morning. He said, you know, if nothing else, Elon's a fast learner, because he got in there and in 3 months he realized, you know, this thing is screwed. I can't fix it. And Doge failed. And, you know, the Treasury Department and Bessent have said they think that stable coins are going to solve the fact that we have to roll over 9 trillion of treasuries a year. And I just don't see it. I mean, so really, let's go back to basics on stable coins. The stable coins exist, in my opinion, in a big way because of what we did in 22 when we grabbed the Russian foreign exchange reserves. And so what happened, and we kicked them out of SWIFT, and prior to that, we had kicked Iran out of SWIFT as well. And what that did was it made companies in certain countries unable to make wire transfer payments internationally. And so You know, and I learned this really directly when I was at Prague last summer and met with a bunch of Russian businessmen. And they said, look, when we could no longer use SWIFT, we had to start using stable coins if we wanted to make an overseas payment. We all had Kraken accounts, and we could, you know, move money around on a stable coin. And we could do it in Bitcoin too, but the Bitcoin price moved so quickly. And, you know, when we agree on a price, we'd want to agree on a dollar amount, because at the time it was still the unit, the massive, you know, leading unit.
I want to interrupt on that one. We could use Bitcoin, but we want to be able to transact on an agreed amount. Sorry, I stumbled on that. It's early over here on the West Coast. How early? What's the lag time between an agreed price and the transaction settling? Like, just from these big payments that all these people are alleging take place, because people talk about, oh yeah, I can use Bitcoin to make, you know, international settlements, but then of course the price is volatile. How, like, is it a week? Is it 2 weeks? Is it a month? Is it like months?
I think it depends business by business, but, you know, people agree to a price, and then sometimes it's freight on board, so they've got to wait until the goods arrive, and then they make the payment. And, you know, as we all know, Bitcoin can go up 10 or 15% or down 10 or 15%, you know, in a matter of days, or certainly in a matter of months. And so, you know, you wouldn't like to think that if you're operating with a profit margin at a certain set level and you're being paid in Bitcoin, you fix an amount of Bitcoin and then it changes, that, you know, that's a problem. So that's why the stablecoin market exists, and it's large and it's growing. And, you know, to me, it was really just an international remittance market. And it was also a, you know, buying crypto market. It was a, you know, if you were in the crypto sphere and you were trading in all these other shit coins, you wanted to have something you could go back to and essentially have cash, digital cash, before you bought another shit coin. And to me, that's all kind of a waste of time and money, but that it is what it is. There's a big infrastructure that does that. We all know that even things like Dogecoin still have multi-billion-dollar valuations. Makes no sense to me. But, so those two things are the kind of the primary use cases as I see them of stable coins. Now, I think the remittances use case will grow. And I think other use cases will grow as well, but they tend to be more internationally based, because when you buy a stable coin, you're foregoing the yield. I mean, you can buy a 1 month treasury bill and get a 3% yield. And so why would you put your money in a stable coin and give, you know, Paulo Ardano the yield when you could get it yourself? So, you know, they're kind of a form of cash, but they're a non-yielding cash, and you can get a treasury bill that'll give you a yield. So, you know, I mean, I think that the thing that's important to understand, though, is that the government wants to prop up the value and the size of the stablecoin market, because they are a large buyer of treasury bills.
Yes.
Right. But consider that we have to roll over 9 trillion of treasuries every year, and the total stablecoin market now is between 300 and 400 billion. So 300 to 400 billion as against 9 trillion, it's not a huge number yet. It's growing. An argument, you know, about how fast it's growing, is it 20% or 50%? Some say it'll be a couple trillion in a few years. That's possible. I don't think it's doubling. It was doubling it, you know, in the early days when you know, the first use case emerged, you know, this remittances use case. So, you know, to me, stable coins are a thing. They are going to grow and they are important. But the notion that Vicent is saying that we're going to grow the stable coin market enormously, and therefore it's going to take care of all this treasury bill rollover, that to me is kind of a fiction, very similar to the way Doge was a fiction.
One more segue, or one more tangential question on that before Phil goes to the next one. Like, you're saying 300, 400 billion as a customer for treasury bills. Collectively, the entire stablecoin industry, how big are they relatively to other purchasers of treasury bills? Are they the 5th largest, the 10th largest? What are we looking at?
It's a great question. I mean, so, you know, there are, I mean, if you look at like, I don't know, Japan, Britain, I mean, some of China, I think the big countries, if you go look at US Treasury holdings, I mean, and it's not just bills, but it's all maturities.
Right.
800 or 900 billion is a big country. You know, I mean, that's the biggest. I think England, China, and Japan, I think, are the 3 largest holders of the Treasury securities, and they're all in the 700 to 900 billion range, I believe. I could be wrong about that. That's from memory. So, you know, 300, 400
small country.
It's a small country, small to medium-sized country. It's not trivial. It's not unimportant. It's real. The notion that it's going to save the treasury market, to me, that's a fantasy.
Well, long lead, like a 5-year plan, like the U.S. government saying, you know, this is a important growing customer that I want to, they're going to grow faster than Japan or
Correct.
Europe. So
Yeah,
it's
no,
like
it's going to
they
grow,
need
and
to
it's going to
cultivate
grow, and that's
them.
going to help.
Yeah.
And by the way, as the value of the underlying, things occur, I mean, having Bitcoin at higher prices will, by nature, kind of make the stablecoin market larger too, because
Right.
they're tied together. So
Interesting.
Who wins? Who wins in this this stablecoin arena? Because as this begins to take place, right, we see PayPal. Obviously, we've got Tether. There's USDC from Circle, I believe. I mean, is it? In my eyes, there is no winner. In my eyes, they all just win because that's the point of them. The point of them is simply to exist as a vehicle to absorb, I guess, so to speak, U.S. money printing. So I kind of wonder.
To a degree, yeah, because they are buyers of treasury bills. To a degree, I mean, what we're really seeing, and I mean, it's interesting because you see J.P. Morgan trying to float their own stable coin. What you're really seeing, I mean, one of the advantages about stable coins is its movement of money, and it's the same advantage that Bitcoin has, right? It's movement of money 24/7, in a very short time frame. I mean, try to do an international bank wire.
That's right.
Try to get it confirmed. Try to do it on the weekend. I mean, it's just you can't do it. And so, the other use case is the I need to move a lot of money really quick use case. Without the hassle of the traditional banking system. Well, fine. What's your Kraken account? What's my Kraken account? Fine. I'm going to send you X amount of money and it's going to settle in 10 minutes.
Right.
So that's a legitimate use case. I mean, it doesn't arrive all the time, but there are certain people that do have that need. So
going back to the big print.
Yeah.
When did we actually, so I'm a Gen Xer, and for me, the big print began in 2008 when I saw the mortgage crisis, and we saw that happen. From your book's perspective, when did the big print start, or is this the beginning of the big print?
Yeah, well, the labels are fuzzy, right? I mean, one could argue it started with the creation of the Federal Reserve. One could argue it started in 33 when they grabbed the gold, or started in 71. I mean, but the way I guess the way I look at it is I think that 2008, what you're talking about, the GFC was what I think kicked off the fourth turning, and I think that was obviously the first big print. The balance sheet went from 800 billion to 3 trillion over a number of years, and when it was at 1.3, Bernanke testified to Congress that he was going to bring it back down, and Ron Paul said, "I don't think you will." And of course, Ron Paul was right and Bernanke was lying. And so that was the first big print. Then there was a second big print with COVID when the balance sheet went from somewhere in the 3s to close to 9, maybe a touch over 9 before they started to taper it again. And so we've really had two big prints as measured in kind of modern terms. And then we're just now pivoting into what could be the third big print. I want to emphasize, and Lynn and I have had a friendly back and forth on Twitter about this. I mean, she says we're going into the gradual print, and she's right. I mean, the last couple, both of those prior events occurred as a result of a financial shock that required them to bring, money hoses of liquidity quickly and aggressively to get it under control. And so, the balance sheet went up, 3x, the balance sheet went up another 3x kind of thing. Right now, as we all know, what's happened in the last month, and certainly really even over the last few days, because the Fed meeting was just earlier this week, is that they've announced they're stopping quantitative tightening, which they had kind of signaled that for a month now. Yeah. They've actually stopped that, and then they were flat for a while, and now they've actually agreed that they're going to not engage in what they call QE, which, it's all a matter of definition, but they're going to engage in what they call reserve management, which is to say they're going to buy $40 billion worth of treasury bills, at the Federal Reserve on a monthly basis in order to keep the reserve balances large enough to make the system work. And I've said in the book, and I've said overall, in general, I mean, this had to happen. This is a mathematical certainty. The government didn't want it. The Fed didn't want to do this, but they had to do it because otherwise they would have had a repo blowout like they had in 2019. And so, let's say it stays at 40 billion a month times 12, that's 480. Well, that's not the 3 trillion or the 5 trillion that got printed in the last 2. That is, as Lynn has said, that is the gradual print. But, you know, you've got to start somewhere. And if you'll recall back to 2019, when the repo blowout took place, you know, they started a gradual print that, you know, was of similar size. I think it was about 50 billion a month. Maybe it grew to 70. And then COVID hit, and then it went crazy. And they, you know, they just printed enormous amounts. So I would argue, as I said in my tweets back to Lynn, that yes, you're right. This is a gradual print, but it could easily morph into a big print if something breaks or the requirements, you know, arise that you know, that make it.
Yeah, I'm gonna interject real quick. So the gradual print. So we say 40 billions of reserves management immediately. That's what Jerome Powell talked about on Wednesday, I guess now. But the question is, again, quantitative tightening went from 9 trillion to 6.6 trillion over the course of 3 years. And then we get into what is known as balance management or fixed balance, not necessarily expansion or quantitative easing. So when he's buying 40 billion of reserves monthly, aren't some of those expiring so that you maintain that stable 6.6 or 6 trillion?
No, will not. No, because they're short, but they will keep rolling them over is I think the presumption. So as I understand it, and I could be wrong, maybe the monetary plumbing people will tell me differently, but from what I've read from Lynn, and she's very good on this plumbing, their balance sheet is going to grow.
Okay.
They're going to expand their balance sheet. Now, again, not at the fire hose kind of levels they did in 08 and 2020. So
unless we have some type of an unprecedented event.
Well, that's the thing. I mean, if you remember 2019, I mean, they had to keep stepping it up. I mean, what we'll have to see is is this enough? And it was interesting because they floated some trial balloons on this, and they were in the 20-25 billion size. And then they said, well, no, let's play it safe. Let's go for 40, and maybe we can bring it back. And I think in reality, what's more likely to happen is they're going to do 40, and 40 is not going to be enough. And so 40 is going to become 60, and 60 is going to become 80, and off we go into the big print, right?
And Larry, the reason why one of the major components of the 2008 crisis was the bad mortgage loans. You know, it's like all these variable, variable interest rates. I forget the term. I wasn't in the house market then, but of course, you know, people who were buying loans outside of their true purchasing power. We don't have that anymore. Loans are much harder to come by. So I'm wondering, is that why Lynn may be leaning to the gradual print, because the loan market is a bit more mature, or it's like, we've seen that before, we're not going to make the same mistake twice? What else can come about that would trigger such an event? Because the loans were bad then, they're not bad now.
It's a great question, and I think that you're right that the housing market isn't likely to be the epicenter of the problem this time. I mean, you know, the last one was really driven by just absolute craziness in the housing market, which was documented in the movie The Big Short. So it's likely to arrive, you know, from some other area, but there is a lot of leverage in the system. And what I find most interesting is that they've pivoted to printing money, perhaps gradually, as Lynn says, but arguably it'll have to be more than that. But they've done so in an environment where inflation is still high at 3%, and where the stock market is at a record level, you know, and where the bond market is relatively calm, and where the economy is, you know, kind of punk but hanging in there. So, you know, what I would suggest is that what's going to make this things, you know, transmute from a gradual print into a big print is one of those other conditions is going to change. You know, the stock market is going to roll over, or, you know, the employment situation is going to get worse, or the CRE loans are going to start to bubble up to the surface and get recognized, or the banking system is going to feel strange. I mean, you know, the AI bubble is going to burst. I mean, a lot of, you know, they're saying a lot of the GDP growth that we're experiencing right now is all because of the growth of the AI data centers, you know, which can't even get enough electricity. And, you know, if and when that, and I'm not saying it is a bubble, it feels like a bubble to me, but who knows? AI is important. AI is going to change the world. I get all of that, but just like the .com thing, you know, that was important. That was going to change the world too, and it got way ahead of itself. That's how this feels to me. And so when one of these things change, we're running a $1.8 trillion deficit with full employment and a record stock market. When, in 08 or in 2020, when the stock market went down substantially, in both cases 50%, and unemployment went up substantially, when the deficit completely blew out. So 1.8 trillion of deficit could go to 3, 4, 5, 6. I mean, it could make COVID look small. And so now, instead of having to roll over $9 trillion worth of bills, we've got to roll over $14 trillion worth of bills. Well, guess what? The bond market's going to break. And so to me, the alarm to watch in this whole thing is the US 10-year yield, which is just broken. If you kind of look at on a recent basis, there's a nice chart done by, I think it was Jim Bianco, who showed kind of it was in a downward trend over time, and we just broke out from that trend. And so, if the US 10-year starts to head to 5 or 6 or something, then they're going to know that, oh my goodness, this is not enough. We cannot continue to do this without printing even more money. And where we're ultimately headed, I believe, is yield curve control. So, and yield curve control is nothing more than QE, where the Fed say, the Federal Reserve says, we are going to buy these bonds and not let the rate go above a certain level. And that's fine. But, at some point, when the bond market realizes that inflation is certain to have another wave up and continue, the entire bond market's going to look at the Fed and say, sold to you. Here you go. 37 trillion sold to you, Fed. And then the Fed balance sheet, which went from 800 to 3 trill to 9 trill back to 6, it's going to go from 6 to 15, because some big piece of that bond market is going to want to sell. And the reason they're going to want to sell is because, guys like Donald Trump and Hassett and Miran and everybody else. I mean, Trump tweeted the other day, he wants to see 25% growth in GDP.
Yes.
Well, you can get 25% growth in GDP. All you got to do is get 20% inflation and 5% real growth.
Right.
I mean, and that's kind of what they're saying. They're going to run this thing hot. And so, woe be it to anybody who doesn't own silver, gold, or Bitcoin, because, or real estate, because, we're going to have another wave of inflation. And that this mirrors what I said in the book and what I've said many times on podcasts, which is this decade is going to will remind people of the 70s, where inflation came in waves. You had the first wave and they tightened, they got it under control. We went to 9 on COVID. We brought it back down to 3. Couldn't quite get to 2. Fine. But now, we've got the midterms coming up, 2026, and, Trump's going to want to win those. So he's going to, hand out stimmy checks. I mean, he's already talking about $2,000 stimmies to, middle to lower income people, as a reflection of what he's gotten out of the tariffs. And that's going to be inflationary. And, Moran and Besant and the Fed board are going to try and get the interest rates down. And that's going to be inflationary. There'll be a wave of housing refis, which will be inflationary. And, off we go. And so I think in the next run up, inflation, I mean, if we have this big print that I see unfolding in the next 2-3 years, the next wave of inflation could take us to 10, 12, 15% inflation. So it's really quite a mess.
Hey, Larry, you were talking about interest rates, and I want to circle back before we change to another topic, because of Jerome Powell. Again, we know that 25 basis points just went down on Wednesday. Now we're at, I forget, for 3.5 or 3.75, but we went down the second time in a row. We're likely going to pause in 6 weeks. But the thing that I've noticed with relation to Bitcoin is that historically, lower interest rates means that Bitcoin is positively impacted. And what we're seeing is it flat, if not slightly down, after what should be generally good news, because it's a more investment friendly market. So my question is, what the hell is going on? Why is the price not correlated anymore to the interest rate reduction? Where should we be looking for more Bitcoin positive price action?
Yeah. So the problem with Bitcoin is that it's a couple of different things. It's the best form of money to protect from monetary debasement, because it's even sounder than gold in terms of stock to flow. And it is, in my opinion, it will be the future of money over a long enough time frame. But sadly, it also has some correlation with the stock market, although it broke that recently, which is interesting, and it broke it in a way that I didn't expect. It's just the stock market's held together and Bitcoin's gone down. But probably the most, important thing that it is it's a liquidity indicator, because it's very, it's very easy to trade, and it reflects, how much money is coming into the system. And although we took rates down, and although they're going to start to print again, it is gradual. And so, and the other thing that happens is it tends to historically not reflect that liquidity until there's a lag with gold. And so what's happened here is, this has been an unusual year, because I think the world has woken up to the fact that, Doge didn't work. Monetary debasement is a real thing, and it's going to continue for years, if not decades, but certainly years, until we reset the monetary system. And so if you believe that to be true, which I do, then you need to protect yourself with things that can't be printed, and gold and Bitcoin are the two most logical ones. And gold is much more widely known, understood, distributed, held by governments, held by corporations, etc. And so it's natural that when everyone wakes up to that issue, they go to gold first, because look, there's a whole, we all think Bitcoin's obvious, but frankly, a big piece of the world doesn't fully get it. And so, what you see is that Bitcoin tends to lag gold. And this is a really interesting chart. Now, this is actually moved to lag the Bitcoin prices in orange, gold prices in white, but and this shifted it over a little bit. But one of the things that's very important here, you can see, is that in 2020, when we started that big print, gold smelled it, knew it, understood it, and took off. I remember it well. Gold went from the 1,900 area, 1,800 area, and shot right up to $2,000. And all my stocks that I was invested in went crazy. And Bitcoin just sat there for quite some time with a real lag. And I was kind of like, wow, what's going on? And then suddenly Bitcoin woke up, and it went from 10 to 60. So it went up 6x. So the historical pattern, and I retweeted Terrence this morning on this, the historical pattern is gold moves first, then Bitcoin follows harder. And so, and you can see that in several different cases. I mean, you can see where, in 2022, where gold started moving higher and Bitcoin sat flat, and then Bitcoin came ripping past it. And in turn, when there's a correction, gold tends to correct, before Bitcoin does sometimes too. So I guess what I'm saying is, if, this is a chart that was done by my partner, Dave Foley, and by Joe Consorti. It's a really good chart. It just lags the two. It says in general, they guesstimated that there's about a 100-day lag between the two. And it's interesting. What that suggests is that if you did the math, we should start ignition on December 12th, which actually happens to be the day we're recording this. So
you heard it here first.
It's very rare that you get a time, timing the market to the day. That's pretty stupid and pretty impossible. But my point is, I think my point holds.
Go ahead and take that credit, Larry. Come on now.
Yeah, come on.
It helps no more of these, man. What the heck? You gotta own that one.
Yeah, but Bitcoin's not ripping. I mean, Bitcoin's only at 90 something, right?
So hold on. You're absolutely right. Bitcoin's not ripping, but we are setting up with the very interesting BART pattern. Like it's been BARTing for like the whole week. It's insane. Sorry, continue.
Yeah. So I mean, I guess my point is, I am of the opinion that sometime in the next 6 months, Bitcoin is going to wake up and shock everybody, and that we're going to very quickly move through this 90, through the 100, through the 124, whatever the last top was, and into kind of the 150 to 200 zone. I think that's coming. I mean, we're below the power law model of where it should be right now, and I think and what I think is going to drive that is the big print. I mean, I think what we just saw, we're still very, if you kind of compare this to 2020, we're still in the early days of the monetary ship turning. It's gradual, right? Lynn's right. We've got the gradual print, 40 billion a month. But let's see if 40 billion does it, or let's see if that has to get bigger. I mean, the history of these things is that when there's a problem, they start small, but then as the problem gets worse, they have to go bigger. I mean, a good example of this recently, remember when they went in with a swap line for Argentina? It's the Argentina peso was falling apart, and the U.S. for strategic reasons wanted them to be our friends versus China, and said, well, that's fine. We'll support you. We're going to give you $20 billion.
20 billion? Yeah.
Yeah. Well, about 3 weeks later, 20 billion became 40. So, and I don't know where they're at now, but my point is that, the big print starts with a gradual print. And we'll see. Let's see. Does the 10-year stay where it is or not? Does the Japanese 10-year calm down? I mean, that's another, there are a lot of signs. There are a lot of warning signs out there. If you get on your TradingView account, you look at the Japanese 10-year, you look at the German 10-year. I mean, they're both pushing up against record highs. And so, the bond market is basically your fire alarm for what's going on here. And we know mathematically and factually that the U.S. government cannot exist with yields getting higher than they are right now. I mean, they've already said that by announcing that they're going to start buying and printing money to the short end of the market. But if the long end of the market starts to suffer and yields start to trend higher, well, that's what will trigger the big print. And my guess is it's 6 months. It can't be more than a year. It's going to happen sometime. And even let's say it's even 6 months. I mean, in May, Powell's gone. I mean, Powell's trying to be Paul Volcker. He can't be because the GDP is too high.
Sir is no Paul Volcker.
Yeah,
that's right.
Exactly
it's
right.
A different time. So.
Were you guys around for that put down? You're probably too young.
No, I just read history. Yeah.
I'm 46. Yeah. I was I was very young, but I was there.
It was such an amazing put down. Oh my God. When Lloyd Benson put down Dan Quayle. Oh my God, it was brilliant. I tweeted about it. You, sir, are no Jack Kennedy. So Powell wants to be Volcker. He can't be. He's going to be out of there. And they're telling you. I mean, it's like when they tell you who they are, listen. I mean, Moran thinks rates should be 2%. Trump thinks rates should be 1%. Hassett thinks rates are way too high. I don't know what that means, but they're too high. I mean, we're going to a lower rate environment, and
also that they shouldn't be planned. I find that interesting that Powell likes to do things very structured, 6 months here, 9 months there, 12 months there. And then Hassett said, no, to plan 6 months ahead he called it irresponsible. So I was trying to allude to this last Bitcoin Tonight episode 1 we had earlier this week. And I forgot the Fed chair where the rates were going all over the place. Which one was that Volcker or was that someone else where the rates were up one 6 week period and then down another? Who was that, Larry?
Well, Arthur Burns took them up and down a lot. During the 70s, they went up and down a lot. And Volcker took them up. Actually, Volcker took them up to 20 and then brought them back down, then took them up again. So during the 70s, rates were all over the place.
It was the 70s.
They had an inflation problem and they didn't know how to solve it. And each Fed chair approached it slightly differently. But they cannot increase rates. They know they can't increase rates. It's a mathematical problem. It's not, and they'll spin it as this is the right thing to do. I mean, Hassett's already started with some of his papers, which I've read, saying things like, well, he thinks the productivity growth is going to allow us. He's doing the thing that Greenspan did. Greenspan cut rates in the 1994 timeframe in order to, get that whole .com bubble going. After he tried to tighten them and the bond market threw up on him, and so then he cut them, and he realized that rates were part of kind of the policy response that is necessary to keep the stock market going up, and that's really the thing. I mean, the whole government is set up to basically, we can't have a stock market decline. I mean, if we have a stock market decline, people get thrown out of office, people lose jobs, people's retirements get wiped out, et cetera, et cetera. So
capital gains tax.
Yeah, capital gains tax goes down, all of that. So, they have got to run it hot. And the nature of an inflation and the nature of these kind of credit expansions is, you've got to continually run it hot because of the way things compound. And so, that's why, and again, in the book, I mean, this whole thing started off slowly with 1913 and 71. And then, we bailed out Lockheed. Well, in 2008, we bailed out all of Wall Street and GM and a few other parties. So, and in 2020, we bailed out, thousands of business owners who, were hurt by the pandemic and got enormous stimmy checks that they didn't have to get back. I mean, it was just, from a policy perspective, the government will always choose giving out money, right, versus being austere. Recognize and even understanding that the consequences of that are inflation, but the consequences come in the future, and avoiding the blow up today is the primary goal, right?
Yes, and actually, to that point, I actually have a few questions. But first,
Sure.
I just gotta back up quickly. We have a question here from Matthew. He's asking, he's saying, can you ask Larry the Legend what he thinks about monetary supply decreasing in 2023 for the first time since the 1950s, and how that may have affected this cycle so far?
Well, yeah, that happened because, as we all know, Powell started a rate hiking cycle in 2022. I mean, he had Powell's a lawyer, not an economist. He was really ill-suited to the job. He did not, and he said inflation is transitory. I mean, he can be excused because he's a lawyer. I mean, Janet Yellen she's a PhD economist, and she agreed with him that it was transitory, and she's an idiot because
politics.
Yeah, you can't grow M2 40% and not have inflation. You just can't. Now, because the mistake they were making is they saw 40 years of deflationary trend. They thought it was just going to naturally continue, which is a common human mistake. You take the past and you kind of project it going forward. But so he said it's transitory, and inflation took off, and it went up to 9% at its peak, as you know. And when he finally woke up, it was like, holy shit, I've made a mistake here. And so we went through a very rapid rate hiking cycle, and that caused the M2 number to go down as everything got substantially tighter. It also caused kind of the crypto winter where Bitcoin went to 15 and SPF blew up and all that other stuff. But that's a side story. The point is that, yes, they were able to decrease it for a while, but then they realized that that's not going to work. If we want to have a functioning economy, we have to have M2 growth. You just can't mathematically have a credit structure like what we've got without M2 growing, or else eventually you'll have the Great Depression. And so it definitely did affect things, but we're now back into growing M2. Last I saw it was growing at about 7 or 8% a year, which is kind of the 40-year trend. And my sense is if and when Trump's guys get into the Fed, it's going to grow even more rapidly because of the policies they're going to enact in order to try and win the elections in 2026. One thing that's interesting, though, it's not such a no-brainer. I've listened to a lot of pods on this. The Fed historically has always been the chairman says what we're going to do and they do it. And then, like, if one person dissents, okay, and maybe two, but not very many. You might actually get into a situation here where you have a really contentious Fed board and you're counting votes.
I think we're already there.
No, we're not far from that. They were talking about that for the last vote.
The last couple, they are very split.
Oh, okay.
Yeah. I mean, I was even bringing this up on our show. Like, from my estimates, it was to the point where they have 12 voting members. It may have been 7-5. Like, maybe a few of them came around at the end, but for the most part of the period, you have a contingency gesturing one way to pause and another contingency gesturing to reduce.
Well, and some of that's kabuki theater to make it look like they're being responsible, but it'll get interesting. It'll really get interesting if you truly have a block of hardliners who say, no, we're not going to vote for that. I mean, because I think at the end of the day, a lot of people think, well, the Fed chairman determines where they go. Not really. I mean, I think he can be outvoted theoretically.
That's right.
So that'll be interesting. But that's also why, I'm sure that's part of why, Trump went after Lisa Cook and they threw Bostic out for his insider trading. They threw that other woman out for her insider trading. And so he's obviously looking at the heads on the Fed and trying to figure out, how do I get as many of these guys as possible, to vote in the way I want. Moran is obviously one step in the right direction. Hassel will be another one. We know Williams is a dove because he's a Wall Street guy. So, it's going to make for great theater. I mean, it's like grab your popcorn because it's going to get interesting. But I'm pretty sure my base case is that, we'll the Fed funds rate, which is now 3.5, 3.7, they'll bring that down into the low 3s, high 2s this year. I'm pretty comfortable that'll happen. And that might bring the 10-year in, which then might kick off a little bit of a housing thing. What'll be very interesting to see is if they do that on the shorter end, and it'll take down interest expense. That'll help the government deficit, but it'll be very interesting to see is the steepener. I mean, what happens to the 10-year when they do all of that? Does the 10-year come in too, or does the 10-year start to go up? And then more importantly, I think what I'm watching carefully and I find interesting is just what's going on with the economy. Are we starting to see cracks in the AI bubble? NVIDIA looks like it's kind of building a top. The employment is starting to get a little bit softer than they would have liked. So which I think is also part of why, you know, they did the 25 basis point cut. I mean,
that's, yeah.
You know, I mean, and again, you know, I mean, look, it's watch what they do, not what they say. I mean, I don't think there's any member of the Fed who wanted to announce that they had to print $40 billion. I mean, it's no doubt in my mind that they were horrified at the thought of having to do that.
Mm-hmm.
And yet they realized they had to do it. They just realized mathematically they had to do it. And so then what they did was they said, all right, well, let's just spin this as being normal. This is not that big a deal, guys. It's just reserve management. And they had Lori Logan come out and say, oh, well, it's a balance sheet issue, not a QE issue. And they had all kinds of people, you know, trying to gaslight us that it's not a big deal. But the fact is, it is a big deal. I mean, we just reversed from a monetary tightening environment into a monetary easing environment. Mm-hmm. And they did that with the market at record levels, and with gold and silver at record levels, and with Bitcoin close enough to record levels. I mean, we've sold off a bit, but you know, we were at a record high of 124 not that long ago. So, you know, so it's, I mean, to me, that's the story. That's keep your eye on the prize. The headline story is they are going to print more money, whether it's gradual or big or somewhere in between. That's not clear, and nobody really knows. But my sense is they'll try to do enough to prevent the stock market from going down and the economy from going down. And if either of those two things occurs, they'll print more. And if that occurs, then look out, because you know Bitcoin's going to 500,000 and gold's going to 10,000. So,
what was the?
Hey, real quick before you ask that, I just want to pause. Hey, we have a lot of people watching the show. I want to thank you all for joining us to talk with my friend Larry, to talk with our friend Larry. I want to invite you guys to subscribe to the Pleb Underground on YouTube, where we have our weekly show, Bitcoin Tonight, where we talk about this kind of stuff and more on a regular basis with me, Phil, and Humble Bitcoiner. Okay, thank you all for joining. We still got a lot more to go, but I just wanted to caveat to remind you all to like, share, and subscribe.
Click that button.
Click that button.
Yes, exactly. Okay, I had okay. So there was two comments that I wanted to make that on your point about austerity. Hey, good morning, Humble. The point about austerity, I have this belief, and please correct me if I'm wrong. I believe, is it the silent generation that was the last one to actually go through austerity measures? Because I feel as though, at least in my childhood, I've never actually seen that, right? I've only seen money printing, shenanigans with taxes, but at the end of the day, I've never actually seen or felt the quote unquote tightening of the financial belt, right, by the government, and we'll say society at large. It's just been like, you know, kind of a show of money printing in different ways. So what are your thoughts on that?
Well, it's, you know, if you measure austerity in terms of government deficits, you know, we really haven't seen it since, you know, kind of pre-Korean War, because the Korean War.
Didn't Clinton have 1 year?
What's that?
Didn't Clinton have 1 year in the 90s?
Yeah, and I think that was somewhat of ledger domain in terms of the way they were calculating the deficit. Okay. But there were a couple of years in the 90s where things were reasonably well balanced. You know, but you know, the original Reagan deficits, which seemed large at the time, were pretty substantial. We all know the Vietnam War deficits were enormous relative to the size of the economy, and that's what drove us off the gold standard. And you know, yeah, I mean, some of the 90s kind of seem quaint. You know, we ran a few deficits, but nothing compared to what we really got warmed up and did. You know, when we had the dot-com bubble and the GFC, and so, you know, that's the thing with every cycle, what has been considered quote unquote austerity. I mean, you know, I think there's some who would say, well, Jerome Powell created austerity when he took interest rates up and slowed down the growth in money supply. But the fact of the matter is the deficit stayed large. You know? And that's, I mean, I also talk about that in the book. I mean, that's one of the most interesting things is that, you know, we're now kind of at the stage where, in theory, a $1.8 trillion deficit is austerity. I mean, because we're not at 3 or 4 like we were at COVID, right? And we've reset what used to be called, I mean, I remember the Reagan deficits. I mean, there were 100 billion, 200 billion, maybe 3 at the most. At 1 year, I think was bad. And people were just outraged at how enormous those were, you know, and how, you know, just et cetera. And as a percentage of GDP, they were smaller than anything we've got now. and nominally they were much smaller because of course inflation between now and then and now. But yeah, and so we've redefined austerity, Phil.
I was going to say we've clearly right
upward. Yeah, austerity is we're only going to run a deficit of 1.8 trillion.
Okay, we've moved the goalposts. Everybody's okay with this goalpost moving, and this is just wild.
I mean, and by the way, it's one of the negatives about all this stuff. And we talk about these prices, and my friends and I joke about it. I mean, yeah, Bitcoin's going to be at $1 million, but if gasoline's $100 a gallon, that's not going to feel as good.
It's all relative, right?
Yeah, it's all relative.
Filling up the same tank, Yeah,
I mean, I remember joking with friends about the $50 hamburger. Well, we're not that far away from that. I mean,
we're already at
most pretty good hamburgers are $25 now.
Exactly.
Right? So
we're halfway there.
Yeah, we're halfway there.
I do have a question. There's so many questions from the crowd. Z-Logic is asking, is China getting aggressive because of Japan's financial situation? I personally, I'm going to just throw in my uneducated guess here, which is just quite simply, China is getting aggressive in my eyes because they understand the empire clock. So China maybe does not want to position itself as the reserve currency because we've all seen what happens to the countries that become reserve currencies, right? They all end up going through this typical cycle that we're going through right now. But they can't, I think that they can't help but want to be number one. So,
well, yeah, we've got a multi-party competition going on, and we used to have. I mean, the U.S. used to kind of lead in absolutely every area, and that's no longer going to be the case. And that's, in my view, that's actually okay. Decentralizing is a good thing in general. I don't want any large country to be too powerful, and so. I'm not sure, why or how, when he says is China getting more aggressive, I'm not sure I see, the aggressiveness on their part. I mean, it's interesting. I mean, I think China just wants a seat at the table. And to be honest with you, I think they probably deserve a seat at the table. And, I think Russia just wants a seat at the table. I think a lot of countries around the world, don't like the way that the U.S. has weaponized the dollar and has misbehaved. And, as a result of that, they're pushing back and they're voting with their feet, which is why gold is doing so well. I mean, it's not really a big surprise to me. As you guys know, I'm a gold silver bug as well as a Bitcoiner. And it's not a big surprise to me to see that the metal's doing so well because, they're the easier to understand go-to solution historically for, central banks and countries that are less developed, less educated. And, it takes a certain level of sophistication to understand Bitcoin.
Absolutely.
I think that everyone will come to Bitcoin eventually because it's so superior to gold, but eventually it's going to be measured in years, not days or months. And so, and I think it's hard for some Bitcoiners to accept that there's still a role for gold. I mean, I haven't sold my gold, but I haven't bought any more either.
Right.
If I earned a marginal dollar, I'd put it into Bitcoin because I think it'll outperform gold massively over time. But which is not to say I think gold's going to go away. I mean, it'll be demonetized somewhat in Bitcoin terms, but they're both going to put fiat in its grave. I mean, I think really what we're seeing right now is the end of the fiat empire, and that's the whole point of this forced turning. And I think by the mid 2030s it'll be all over, and we will have reset the monetary system to sound money. And the reason we'll have done that is just because of all the pain caused as a result of the inflation, which is now in the system and about to get much worse.
Hey, I want to transition to you were talking about global politics, and you tried to give President Trump a little hint or a little help recently, and you sent him a copy of your book. Can you give us a story about?
I wrote the book because I'm trying to help people, and I sent it out to Bessent and Trump and Vance, and I pretty much sent it to everybody. I sent it to Tucker. I sent it to Joe Rogan, and I think the book is a very clear manual and tool for explaining how America has gone wrong. I mean, I remember the America of World War II, post World War II America was a beautiful country, and honestly, we've lost our way since then. And so I tried to map that out in the book. Then I tried to map out how we could fix it. And then I there's even a chapter in there where I talk about fixing it, and I I talk about the speech the president should give and all that stuff. So I basically have kind of laid out a roadmap for, one man's view of how we got here and how to fix it. And so I sent it to President Trump, and of course I complimented him because he's got a big ego. And I said, look, after the compliment, I said, look, as you dig into this issue, it's, you face one hell of a challenge. As you dig into this issue, I think that reading this book might help. I hope you'll read it. And, thank you for your consideration. I didn't say that. He wasn't saying that at the time. But
so all those people you sent it to, he was the only one that responded.
He was the only one that responded, yeah, which I thought was interesting. So, and my sense is, look, I mean, what this tells you is that he's got a good staff, right? Yeah. I mean, there's no way in hell Trump read my book. There's no way in hell he saw my book. There's no way he's even aware of it. But somebody in his staff actually opened the package, took the time, probably read the cover of the book, probably read the back piece, probably read my note. And said, look, here's a guy who's a supporter, and he's trying to help. And so they sent me back a nice letter signed with an auto pen. So, look, I appreciate that, and I'm going to frame it and give it to my grandkids. And, I mean, the dream would be the staffer reads it. The staffer says, oh, my God, this is really on point. Sir, you got to read this thing. Trump,
yeah. And then
Trump
you get the White House like handshake.
Trump reads it and goes, oh, my God, this guy's a fucking genius. I'm gonna invite him to the White House and tell everybody in the country they got to buy this book.
Well, make sure you show the president, the special thanks page. That would be the most important page.
Right, exactly. I said, look, one of my best editors was Ulric, who helped me substantially. That'll be in there. Yeah. So right. So look, that's the dream. And is any of that going to happen? No. But but an author can dream. And
yes, sir.
And that is why I wrote the book. I mean, I wrote the book to try to help. I mean, I love this country. I love what it stands for. I love the founding documents and principles. We've gone wrong in many, many, many ways, and yet we're still, the best country in the world in my estimation by an enormous measure. And it, we can course correct and we can fix this. And so, having been in the monetary sphere my entire career, having studied it, read the Austrians, read the classicists, read Marx, read all of it, I do believe I have a clear understanding, of what's wrong and how to fix it. And so, that's the book, right? And I tried to write it in a way that was engaging enough that people would actually read it. I didn't want to write a textbook. And so, I've been told that people do read it and they enjoy it. So, we'll see, right? I mean, stranger things have happened. I mean, there's a lot of providence going around in all of this. I mean, I was tapped on the shoulder. I mean, I know, Ulric, I know you're Christian and spiritual. I don't know as much about you, Phil, but I feel like I was tapped on the shoulder and said, write this book. And then when I started writing it, it just flowed out of me naturally. I knew exactly what I needed to say. And so, we'll see, right? I mean, stranger things have happened. Maybe it won't be Trump. Maybe it'll be J.D. Vance. It somewhat parallels his story with a hillbilly elegy, where he talked about how, he grew up in a economically disadvantaged situation and how the Midwest of the United States has suffered. And so, I'm a Midwesterner. I grew up and I watched the auto industry decline as a result of the policy choices we made. And so, we'll see what happens. I hope it catches on. I mean, it's funny. I'm approaching 50,000 units sold of the book. I'm not quite there yet.
Nice.
Good job.
Well, you guys say it's great, and I guess it feels great. And a lot of people tell me that's a lot more than most people ever sell of any book they write.
Yes.
Right.
Yeah. I've heard about,
Robert,
Larry, hold on. I've heard so much about all these books that have been released. Hey, I'm a Bitcoiner, buy my book. And they get a lot of chirping, reposting, support. And then when I hear about their numbers, they're lucky to breach the four figures, man. So
exactly.
Congrats. That's the first time I've heard about that. Congrats on that one.
Well, thank you. I mean, Kiyosaki sold 50 million copies of Rich Dad, and there are, a billion people out there. And I mean, I have to say, honestly, I'm a little disappointed. I wanted it to go viral, and it's still possible. I mean,
it's still early, man.
If Tucker wakes up or Joe Rogan wakes up one day, I mean, it's funny. Kiyosaki has become a friend of mine. He's a really nice guy. He's a big supporter of the book. And he told me the story of how he was in Africa one day on a trip that he'd wanted to take for a long time. His wife didn't want to go with him. He just arrived. He got a telegram from his wife. I guess it's back when it was harder to phone Africa. And it said, you got to come home. And he, called her, telegraphed back. And said, why? And she said, because Oprah called.
Yeah, that I was thinking that, like, okay,
Right.
5 million. Did it happen to involve Miss Winfrey? Yeah.
No. And it had been out a few years. It'd been out a few years. And, you know,
That's
it was
right.
like mine. It had sold. It was doing fine, but it had. And so he went on Oprah, and she turned to him after it was over, and she said, you know, we just sold you a couple million books.
Yeah.
That's right.
Right. And so I don't think Oprah's doing the book club anymore, but, you know, I guess today's equivalent of Oprah would be Joe Rogan or Tucker Carlson,
Yeah.
or, you know, or one of the big guys. I mean, if JD Vance came out and said, gosh, this book is really important, you should read it, that would do it. But I'm not holding my breath. You know, I wrote it, and we'll see what happens.
You know, the reality is that all that is needed is that the right person reads that book.
Yeah.
Right.
Right.
Well,
It's really all it is, you know?
Kelly read it and liked it and tweeted about it. I mean, Richard Branson liked it, read it, and I have his picture of him holding it. I mean,
wow.
You know, Kiyosaki has been a huge fan, and he's got a lot of followers, so that's been very helpful. So, you know, I'm making some inroads and stuff.
That's right.
You know, what I hope it is, one thing I do think is true about it, I do think it has staying power in the sense that it's kind of a timeless topic. And I think it's going to be relevant for the next 5 years. And so even if that big print occurs 18 months from now, when it does occur, there's going to be somebody who's going to wake up and say, holy shit, this guy wrote a book about this 2 years ago.
Right.
And it's still relevant. I mean, if you look at The Fourth Turning, you know, that book was actually written in 1998. Okay. And it described what was going to happen in 2008 in an incredibly accurate way. And you know, I don't know how many of those books they sold when it first came out, but probably like mine, it probably did okay, but not great. And then suddenly when things started when we got into A Fourth Turning, you know, it kind of quote unquote became a catchphrase, and that became a must read, go to, gotta have book. And I'm sure, you know, Strauss has sold, Howe has sold, you know, hundreds of thousands, if not millions of that book now because of, you know, the thing. And so that could happen here, right? When the big print occurs and it becomes more obvious that this thesis is correct, you know, at that point in time, the book could get a kick in the pants, which would be great.
Larry, we talked about the title when you were thinking about it.
Yeah.
I thought when I heard your actual editors mention this is what you should kind of name it, I'm like, yeah, that was it.
No-brainer, right?
Like, not only is the content timeless, but the title is timeless. And us as YouTubers, like, we're constantly trying to figure out the right title to engage people. And people see that all the time. The right title, the right thumbnail. It's a great cover. And sometimes that's half the journey. You know, people walk into a bookstore, or Amazon's like, why should I buy that thing? And it's like, they're not even thinking about why until they look at that part and see.
Yeah, not everybody was around for the, you know, or not everyone knows the story of The Big Short. And of course, that was what it was a takeoff on, you know. But yeah, so we'll see. We'll see.
Yeah. Hey, you know, Phil, I don't know if you have any particular direction, but I do. Before we leave the big print, you talked about how the lower half of the world's finances are impacted by this fiat experiment. You know, we see the technology advancements now with AI now. Before it was smartphones, you know, tablets, the internet. But you know, you grew up in the 70s, in the 80s. You know, or you established yourself professionally in the 80s. Like, I guess my question is, like, is the lower half of, let's just focus on the United States because it's hard to project internationally, but in the United States, is the lower half poorer or richer now than they were back when you were in your formative years?
Well, I think on a relative basis, they're poorer because there are some people who are super rich. And, you know, labor had more value relative to capital back in the 70s and 80s. I think on a gadgets and lifestyle basis, they're massively richer in the sense that, you know, I mean, I tell the story of how I used to save my money to go to the phone booth to have, you know, one long distance call a week to call my parents from college to tell them that I was okay. Right. I'm still alive, right? I haven't drunk myself to death. You know, I mean, and now you can call anywhere in the world, and all you got to do is have a cell phone and pay $35 a month. You know, you can communicate, you can self-educate over the internet, you know, et cetera. You used to have to pay for a college degree. You used to have to go to a library. You couldn't get, I mean, look, in so many ways, life today is very, very, very superior to life in the 70s and 80s. because of technology, because of the microprocessor, really, because of decentralization, because of a lot of things. In turn, though, that's helped solve some problems, like the power of the press and everything else, because we've got all these alternative media sources. But it's also created other problems. It's led to more of a winner-take-all society, and the fiat money has been weaponized against the lower classes, and the lower classes have not had the bargaining power to keep their wages in line with the value of their work. And then if they had no ability to save, because the thing they're saving in is getting debased on a constant basis. So, and they're behind in the asset game, because the people who are closer to the money printer can borrow money cheaply and buy the assets, and the assets go up in value. So, the thing that I think is substantially worse than when I was growing up is the unfairness and the inequity. Like the guy who ran Ford Motor lived in Ann Arbor, not far from where I lived, and my dad was a small businessman and he did fine, but I'm guessing the guy who was running Ford Motor, which is a huge multinational corporation selling millions of cars a year. It was a big job, right? And he was probably making 6 or 7 times what my dad was making. You know what I mean? And as he should, because he had a much bigger job than my dad had. But my point is that my dad was part of the shopkeeping middle class, and in turn, today that same Ford Motor guy is making $40 million a year. He's making 400 times what the line worker or my dad is making. And that's not to even start to consider Wall Street as an example, where for shuffling paper, a guy like a Henry Kravis can make himself a billionaire, and really is playing a no-lose game where, if things don't work out, he'll get bailed out, like Lloyd Blankfein at Goldman Sachs. So, the inequities, I think, and one thing is true of humans and really true of mammals, they've showed it in experiments, is that we're all wired to want fairness, right? You take a couple of monkeys, you start feeding one the meat and you give the other one crummy stuff, and the second monkey gets really pissed off, like, hey, what am I, chopped liver? And so, and I think that's part of the problem that we're seeing today, is just the incredible unfairness in the system, and the way the system is just built to extract rents from the lower class. Why can rich people borrow at favorable rates and poor people have to pay 32% on their credit cards? That's just usury. It's outrageous. And the banks can borrow cheaply from the Fed, turn around and lend it out at 30%. You're just harvesting off of, it's really, in fact, there's a guy, I want to give a shout out to my buddy, Neil Flesher, who wrote a book called Modern Chains, which I just read and I love. I highly recommend it. Okay. And it talks about how really what's going on now, this is almost a form of slavery or feudalism that we're living in.
It absolutely is,
with this monetary system, and yet the problem is that, and we outnumber them. That the average people in this country outnumber the elites by a great deal. But when you're in the bottom 50% and you're working 2 or 3 jobs to just keep your head above water, you don't have time to read my book. You don't have time to buy Bitcoin. You don't have time to go out and protest. It's hard, right? You're just trying to keep your head above water. So
all by design.
All by design. And that's how they want it. And then they want you, if you're not focusing on keeping your head above water, they're going to entertain you with, NFL football, and bread and circuses and or, hallucinatory drugs, go get yourself drunk, and escape reality. It's really sad. It's not what this country used to be. It's not what we were. We've drifted a long way, and and we need a reset. But Providence, with this great wisdom, has given us this tool, and the problems are becoming more and more apparent every day, and they're going to bubble up to the point at which we're going to use, we're going to have a crisis, and then we're going to do a total reset, and things are going to be better again. So,
yeah, I agree. I actually, I wanted to go back to something that you said. It was probably like 10 minutes ago or something like that. But
I kept taking tangents.
Yeah, it was. But the thing is, the tangents were so good. I'm like, it doesn't matter. It's just, it's so good. It's like, forget it. I want to listen to this anyways. But I wanted to go back to something that you were talking about, the other countries, right? Like Russia and China, right? Not really necessarily agreeing or, being unhappy with what the U.S. is doing, right, with the monetary supply, and being the world's reserve currency. But let me ask you this: do you think that it's a little bit kind of like a moral hypocrisy? Because every country, right, according to history, every single, maybe we won't classify it as countries, but we'll say every empire that has risen to reserve status power has, in the end, abused it and fallen apart. And we've done this cycle. So it's like, it almost seems a little bit like moral. And I'm not saying that means, hey, the empire clock should just stop. That's it. State's number one forever. And we could just close the book. But I'm just saying it almost seems like, we've done this maybe from the beginning of the empire clock. So maybe we got to figure out something else, because clearly every country is going to just abuse their power of the ability to control the money supply. And not only that, but as well be the world's reserve currency. And of course, right, every country, or at least I assume that every country is going to do the devaluation similarly, right? It's always the same thing.
Recognize their money.
Yeah, there's no doubt that this pattern has repeated itself over and over again throughout history. And look, I ultimately hope for a world where nation states become much smaller, much less powerful, where, individuals are sovereign and we live in smaller communities, more direct democracy. I mean,
old school Europe.
Yeah, Switzerland, right? I mean, I think, centralization and concentration of power, leads to potential abuse. I mean, witness what happened with Nazi Germany. You get a modern industrialized economy run by a nut job, and he decides to kill millions and millions of people. I mean, I think ultimately we are evolving as a species. I think we will evolve away from that, hopefully before we wipe ourselves out nuclearly. But I'm very optimistic about the future of mankind. I think that we will solve this problem. And I think that, being back on a sound money standard will lead to a much better world in all respects. So, it's hard not to be optimistic and excited about what Bitcoin will bring to the world and what my kids and grandkids will live in. It's going to be a lot better. It's going to be just much, much better.
Yeah, I agree. And again, I am optimistic of the future based on Bitcoin. Before Bitcoin, I was a lot less optimistic. But I can't help but how could I say this? I can't help but feel a little bit of contempt for human behavior, which does not seem to really change.
It's because like when they're in that position, like it's so tasty. Like, oh, you mean I get to print money? And so it's like, even though like there's a balance of power at that top level, they're still oppressing the people at the bottom. So it's like the decentralization. Oh, go ahead, Larry.
No, you got it. I mean, this story is as old as time. I mean, this is, Eve giving the apple to Adam. I mean, mankind, we are all fallen by definition,
right?
And flawed. And yet here we are as a society marching forward, flying around the world, communicating, inventing new things, doing stuff. I mean, even as bad as it is right now, I mean, I think, if my grandparents could see, us talking from different parts of the country in real time, broadcasting to hundreds, if not thousands of people, they'd be shocked, right? And I'm suspecting that, someday my kids will be doing shit that I couldn't even imagine. So, right. Things are getting better, and we are progressing as a species and as a society, and that's all fantastic. I often say, given all these inventions and things we have, we should all be working 30-hour weeks and, focusing on leisure activities, but we're not, because, because all the money is being sucked up to the top, and so they keep us, and they've intentionally got a system that keeps us all on a treadmill, but it doesn't have to be that way. And that's what Bitcoiners understand. So.
Hey, Larry, speaking of your grandparents being excited, I'm sure they'd be excited about, the success you've had in life, but they'd probably be also excited to see you, getting in front of the mic and having your own podcast. And so I kind of wanted to talk about that. We've had a couple of your guys on there. What's his name? So we'll talk about how about you just summarize the show, introduce all your partners on the show, and give us a little summary of like what you guys do.
So yeah, my girlfriend Mel and
shout out to Mel.
Yeah, big shout out to Mel. Everyone knows who she is. My girlfriend Mel and George Bodine and Bob Burnett and Gary Savage and others have all come together, and we've created something called the BTC Boomers podcast. And we invite guests on, and we just try. We're all in our 60s, and we just try to bring kind of a boomer perspective to Bitcoin, because we know there are a lot of young people in Bitcoin, and they haven't seen everything we've seen, and we have biases as a result of being boomers, but we also have knowledge and wisdom and history in the world that some of the younger people don't have. So we try and share some of that. And we've been doing it on a regular basis, and it's been working out. It's been working out really well.
I didn't know you grabbed that picture. That's a good one. That's great.
Yeah, I'm on the fly. As soon as he mentions it, I'm like, boom, we got to show this picture.
Okay.
It's a solid picture. You guys look very sophisticated here, and I'm just going to assume that Larry, you're the guy in the middle.
I think so. I
feel like you're the guy in the middle.
It looks very Mad Men-ish. Like it's just so. It's so 60s kind of chic.
Yeah, I like it.
I think that was the idea. The idea.
I like it. I like it a lot.
The funny thing, the great thing about the show, by the way, what I remember, like I've always wanted you. By the way, for those who don't know, when my first conference, Larry was two people I met at the first conference I went to in Miami that really impacted my Bitcoin career, sitting right next to me on this show, Phil, and then Larry a couple days beforehand. I just want to say that when I met you, Larry, I was like you were as excited to meet me as I was excited to meet you. I think that shows your character, because you have had already 100,000 followers, didn't need to be that gracious, and you were so kind. And Phil, of course, we've talked about our story before. It's like, meeting you guys really impacted my journey. But I will say this, that going back to the podcast, it's like the boomers. One thing I don't like about the Bitcoin culture kind of base arguments, the boomers did this to us. No, it's not boomers. I see a lot of Gen Z people that are absolutely holding up hyper Bitcoinization. I see a lot of millennials and Gen Xers that just completely don't get the picture. The reason why I'm doing Bitcoin content is because my fellow millennials are just absolutely lost. And so it's like, but when I see my boomer dad brought me into Bitcoin, so I have a special affinity for boomers, because like you said, Larry, y'all been there before. You've seen, guess what? You saw a world you saw a world on the gold standard. You were living and thriving in a world on the gold standard. What was that like? We should be listening to you guys, especially the ones that understand the difference between gold, fiat, Bitcoin. What's the positives and negatives of all of them, and why this world is impacted by that fiat experiment.
Look, and with it, the boomers were a greedy generation. I will accept that as a general, overview. I mean, it was very much of a kind of get yours while you can. And I look at my kids who are millennials or Gen X, and they're much more concerned with the overall well-being of everybody. And I think that's a good thing. I think that's a reflection of kind of the maturing of society and just, more and more people thinking in a better way. It wasn't that unusual. When my grandfather was around or his father was around, it wasn't that unusual for, a father to take his son particularly, and whack him upside the head. Do you know what I mean? I mean, that was just kind of standard operating procedure. You did something wrong and your dad would slug you, and I'm not saying that happened to me, but but my point is that, we're evolving towards, just a higher level of being, I think, all the way through. And with every generation, they learn something from the prior generation. And so, it's a good thing, right? That's the way it should be. The human condition is getting better and better as we get smarter and smarter. So, it's all good. I do object to when people put all boomers in the bad guy category, because I don't think all boomers deserve that. I mean, there are plenty of us who represent kind of, we're appalled at what we see, we're just appalled. And the reason we're appalled is because we remember, what it was like and how good it was.
Right.
And it's like, oh my God. I mean, I can't believe this is what society has come to. Do you know what I mean? So.
You're making me think of the pendulum sway, right? Essentially, like that's what that is, right? We're kind of going up, right? As we grow in consciousness and quality of life and being. And at the same time, that pendulum is swaying, right? So we kind of get to these points of like extreme left or extreme right. And I'm not talking about politics. I'm just talking about in terms of behavior and stuff like that. For example, where parents become, you know, we have the generations of like millennials, right? Where you have the helicopter parents, right? But that's too much, right? Like now that's too much. So now you got to pull back a bit. And of course, we know what's going to happen. There's going to be a pulling back. It's going to go too far back, too lax, but not as lax as it was before. And then it'll swing back. And so it's just kind of like the ebb and flow. So I do agree with you. I do agree with you that.
There's no doubt about it. I mean, one of the things that, I mean, the boomers, you know, agree, but one of the things the boomers weren't is we weren't coddled. Our parents were actually pretty self-absorbed as well.
Yes.
And I remember it like it was yesterday. I mean, when I turned 18, my parents kind of said, you know, kicked me out of the house and said, good luck, have a good life. You know what I mean? And they didn't drive me to college. I mean, I was fortunate. They did pay for my college. I'm very grateful for that. But it was kind of like, you know, you're on your own. And you kind of compare that to what I've seen, you know, in raising my own kids and what's more the standard today. And, you know, the more recent generations have been much more coddled than the boomers ever were. I think most boomers had a similar experience, which is, you know, good luck, you know, off you go.
Good luck with that.
Yeah, good. It's your life now. Good luck, you know. And I have to say, I mean, there were plenty of times in my 20s where I was scared, you know, where I was kind of like, holy shit, you know, if I don't keep this job and make some money, you know, what am I going to eat?
Right.
So
you just kind of threw it out there on me, Ulric.
What?
The last question.
I mean, you're the. I give precedent to my elders, man.
President is present to the elders. Okay, well, I'm all out of questions. But however, we do have a question. From the crowd, right? That I just gotta scroll up for. Hold on a second.
A while ago.
Yeah.
Don't forget to like, share, subscribe, guys. We love bringing this content to you. We want to bring it to more people.
They're kind of like two wrapped up questions. Okay, one of them is from Z Logic, and the other one is from Mando Pleb. The first one is, did we talk about paper Bitcoin or price suppression yet? That's right. I'm bringing that up as the last one. And of course, that is, going to bring up the, how delayed can the Bitcoin pump be? I think they kind of go together.
They do kind of go together. I mean, you know, so look, there's no doubt that we are living in a different environment than we lived in, you know, pre-ETF, BlackRock, all these other people getting involved. And, you know, Checkmatey has some really great charts. He's on Twitter. You can see him that show the growth in BTC derivatives, and they're substantial. And we all know that the price of gold has been suppressed through derivatives, although they've had decades to do that. And the paper gold compared to the amount of gold outstanding is enormous versus the paper gold and paper Bitcoin versus the amount of Bitcoin outstanding. And so Bitcoin moves much more radically and much more quickly than gold. And so, while I think there has been some paper Bitcoin involved, and while I do think it has had some role in price suppression, I don't rate that as being enormous. And what I would also say is that Bitcoin's going to do what Bitcoin's going to do, and it's going to destroy the paper shorts at some point in time. And that's the thing that I think a lot of traditional finance people, a lot of banks, a lot of people are playing in this game, hedge funds and others. I mean, I know, for example, there was a time when there were hedge funds who were long the triple Qs or long the Mag 7 and short Bitcoin as a proxy. And I was just thinking to myself, man, when that blows up, they are so screwed, because the triple Qs and the Mag 7 are enormously overvalued and Bitcoin is enormously undervalued. So they're going to lose money on both sides of that trade. But, you know, they'll have to learn that the hard way. And that's why, you know, there will come a time, as we know, and those of us who've been around it for a while, you know, there are going to be some God candles, and they're going to be religious experiences for the people who are on the wrong side of this. I mean, I think one of the things that I you know, put up in a couple of presentations I did recently, which you can go see if you look at my Twitter thread, is, you know, Fred Krueger did a great book called 1 Million Bitcoin. I recommend that book as well, with Ben Sigman. And but you know, this is an interesting statistic. From I think 2020 to 2025, you know, Bitcoin went up, I don't know, 7x or something. if you miss the top 10 days, you were down 23%.
Yup.
Right. So what does that tell you? That tells you you've absolutely got to hodl, because what's going to happen here, and this is what makes it so hard for people. And I know people who saw it at 100, it went to 105. They said, oh, it's too high. They sold it, and now they're trying to figure out when to buy back. And they, and I called them. I said, did you buy it at 80? No, it's going lower. Well, it's not. It's at 90 right now. So, okay. We're going to wake up one day, guys, and it's going to be at 120, going to 130, going to 140. You're not going to have a lot of time. It's going to happen very, very quickly, and it's going to happen with God candles. So, I mean, the guy I really respect, the macro analyst Luke Groman, recently mentioned that, he thought we were in a tight liquidity environment. So he was selling a lot of his Bitcoin, to focus on gold and to build cash. And I thought to myself, yeah, I get it. It might go lower, but when are you going to come back in?
Right.
When are you going to buy it back? I mean, if you sell it, you've got to make, and my gut is he will end up with less, when it's all said and done, he will end up with less Bitcoin than he had before he made that sale.
I mean, he's betting that it's going down to 75 and 70. And like, I mean, it may happen. Yeah. But it's like I don't know. I guess the narcissism or the ego of people to try to call these bottoms when after Bitcoin goes down 40% in a world where you and I think that essentially the cycle is kind of over. We don't see those extreme bottoms anymore.
Exactly. And you know what? It might go down that much, but
right.
I just don't care. And
right.
I mean, Amazon went down that much multiple times, and yet those who held it, got a 218,000% return, because it was a network and it just kept growing. And, this is a very similar situation. It's a network. It's going to continue growing. And so, I just hodl. I mean, look, I'd love to see it go down to 60. I don't think it will. It might if we have a big blow up and a risk off event, and if we have another March 2020 like event, COVID, something like that. It could go down that low for sure.
You're asking for a black swan, so it's like, like that's what you're saying.
No, we are going to get it. There's no question.
But will it happen so soon that it would take us down?
Well, and you better not delay. Although in that case, you had a little bit of time. You had 3 or 4 months to buy it, but you didn't have long to buy gold. Gold went down hard, and then it came back really hard. And so, yeah, I mean, if that happens, okay, fine. But my view is we know how the policymakers will respond.
That's right.
And it will be by printing money, and we know what that means. So, the zigs and the zags and the timing of all this, I mean, nobody can get them right, and nobody knows. And is Lynn right? Is it going to be a gradual print? She might be right. We might gradual print for a few more years, but we're still printing, and M2 is still growing at 7%, and Bitcoin will someday come to reflect that. And as it does, and then at some point, maybe that gradual print becomes the big print. And then when that occurs, we're going to go and we're going to trade it, 2x the standard deviation of the 200-day moving average. And so, that could take us to 400,000. Who knows? We just don't know. I've always said Bitcoin kind of trades like a wild animal, and that's okay. I like that.
Yeah.
But you need to understand that.
Keeps things interesting.
I want to,
Yeah, I see that question. Let's see.
Yeah, we have one more. Oh,
yeah,
sorry.
Well, the black swan is coming. We understand. The problem is that time is also variable, and so we don't absolutely know when this black swan comes. So if you're banking on the black swan taking us down to 60 because we're at 90 now, you don't know if we go up to 180 in a year, and then the black swan comes and it only takes us down to 100. So it's like we have to be considerate that there is a time value, a time variable to these predictions.
Yeah,
we have to be cautious of that. Luke's selling right now, saying, "Oh yeah, because we're going down to 60." We have to, is it too egotistical to say that he just trusts that momentum?
No, I think he's looking at it the way a Wall Streeter would look at it, which is to say, look, we've had a good run. I'm sure he had 2 or 3x's money. He had a nice profit. I'm going to take that. I'll come back at it at some point in the future. And my only point would be that this isn't like a traditional Wall Street asset where you're got a likely chance of getting back cheaper in the future. I think more likely, he's not going to come back at it. If he wants to buy back what he had, he's going to have to pay more. But
right.
Boy, I don't know how to answer this question. It's so dependent upon your situation.
Humble, come on.
Yeah.
Don't scare our guests away, Humble.
It's not financial advice. That's okay. That's why we have a disclaimer.
No, I know. I just don't know the answer. I mean, I think in general, optionality is a great thing. So, any big purchase versus renting, I tend to be, on the rent and the optionality side. I think we live in a time where we have to learn to expect the unexpected.
Right.
We saw that in 2008. We saw it in 2020. We're going to see more of that. And so having optionality, even I tweeted a while back, having some cash makes some sense. Do you know what I mean? And the reason for that is cash is what you can use when things are on sale. If we have, the stock market is really, really frothy. Now it's probably going to continue. And I've lost a lot of money, shorting the stock market or playing put options in the stock market. But at some point, if history is any guide and the laws of nature have not been repealed, there's going to be a big downturn in the stock market, which is going to present opportunities all over the place. So, you want to have some cash.
Yeah, I can't disagree with that. And of course, right, everybody's situation is different, and everybody, you should know your expenses, know how much it costs for you to live and all that good stuff, so that you don't find yourself in a situation dumping your Bitcoin at terrible prices relative to your entry points that make you regret. Because I can definitely say that every single sat I've ever sold, I have never been able to get more of them. So I've always been able to buy back, but it's always been less. Yeah. So there's the lesson, Yeah,
I think that's right. Look at even Saylor, in order to address the critics, just sold did an ATM to raise $1.4 billion in cash so that he had 2 years of interest payments covered. It doesn't hurt to be. If you've got Bitcoin, the asymmetry here is so large.
You have to hold it.
You don't need to have as much as you think. If you have 10 or 20% of your net worth in Bitcoin, you're going to be fine, because this thing's going to do 10x, and then it's going to do 10x again. And so, a lot of us have more than that weighting, but that's a great weighting to start off with. And you just don't want to lose that. You don't want to be forced to sell that in a downturn. That's correct, Phil.
Yeah. So. Man, it was absolutely awesome to have you on the show. We could just,
guys. We could talk for hours. I got to run. I'm sure you guys do too, and the audience probably does. But thank you for everyone who's bought the book. Thank you very much for your support. I really appreciate it. Don't make much money on it, but I sure hope we can spread the word. And I think it's a decent tool. If you agree, pass it on. I think the thing that every individual can do is try to, educate other individuals. That's how good ideas spread. That's how we separated from the British. That's how, you look at any kind of big change in the world. It's occurred because one person told another person and they all agreed. And this is a better idea. And so we need to convince the whole world that it's a better idea, and then we can make it happen.
I love it. I totally agree. Guys, as you know, there's going to be links. There's a link to the book in the show notes. It's on Amazon. There's a link to Larry's profile and also the business that he's working on, and all the good stuff is there. Guys, thank you again for joining us on this amazing episode of Pleb Underground. And Lawrence, once again, man, we really, really appreciate it.
Thanks, Ulric.
Love to have you back.
It was a pleasure.
Good to see you guys.
Yeah, absolutely amazing. Have a great weekend. Everybody, have a great weekend. Don't forget, Monday, right? We're back. Daily news, 12:10 p.m. Eastern, and then Bitcoin Tonight. Also Monday evening, 8 p.m. Eastern. We are going to go through all of the drama. Stay tuned. There's always drama in Bitcoin, and we love to talk about it. Get very petty. Anyways, guys, have a great rest of the day. Take it easy.